Hi guys, thanks for joining me today that we can chat a little bit about IS2 inventories. It's really one of my favorite accounting standards. It's quite a short standard, which helps, but it's simply written. There's not a lot going on, and if you sort of understand the way it's written and the perspective of the standard setters at the time they wrote it, it's really a standard that you can almost come to the answers without really knowing the rules in the standard. So we're going to try and discuss it sort of from that point of view that I help you understand what you're reading, that you can almost answer the questions like the standard setters might have answered them many years ago when they wrote the standard. Something that's really important that I have to emphasize up front. Please, guys, this is not FBS. You can play back to your FBS lecturer as well. This is an FBS. This is a lot simpler. Remember, with financial reporting, we're reporting about things that have been. So we will know the answers that you need to be able to do the sums because you're looking back in time. FBS is this forward looking subject where they're trying to do budgets and projections and all these wonderful things. But don't bring that into this. Please, I want you to isolate your FBS knowledge away from IS2 inventories and don't try and confuse the two and don't try and get cute with IS2. Keep the cuteness for FBS. This standard, let's keep it simple and let's go for this to be one of those topics that you really want to get assessed on and do well in the assessment on it. So let's dive into it. What I'm going to try and do and the way I'm going to try and approach this is I'm going to open the IS2 standard. I've downloaded the latest version from the website, but it's an old standard, so it's the same as the one that you'll have now in your guide to IFRS. So take a moment to open your IFRS guide, and I'll be back with you in the standard now. Right, so there's a copy of IS2 open on the screen for you, and have yours with you as well, and have a pen and paper with you as we go through it. As I said, this is an older accounting standard. You can see some dates in here. The first date is April 2001, etc. But the dates that I really want you to focus on is there in the middle of the screen, December 1993. And to be honest with you, the development of this standard goes back even further than that. So you can look under there was in October 1975. So it's really one of those that has been around for a long time, hasn't been changed or tinkered with too much. And I think partly the reason for that is if you think about inventories on your statement of financial position, it's a massive number. And if the ISB was to start tinkering with this standard, that might have massive measurement issues for companies and would change the values on their balance sheet of the assets. So I think it could be a challenge for the ISB to revise inventories. I think it's probably long overdue though, given where the framework's moving and fair value accounting. The standard is really not about fair value accounting. So that's the starting point now. When you read IS2 with me today, I want you to remember there are these two views of the accounting world. You got your space cadets that are fair value, which will do with financial instruments. You've done a little bit with investment property perhaps. But IS2 is an older standard. It's about costs. That's the maximum, and if we can manage to write down below cost, then we'll do that as well, but we never go above cost with the standard. So if your view of the world is you like fair value accounting, that's fantastic. Please keep that view of the world, but for this standard I want you to put it aside, and when you are interpreting the standard I want you to think like a dinosaur. I want you to think about cost, conservatism. You don't want to go over cost, and that's your mindset now as we discuss the standard. Right, so now we move on to the second page. We have the table of contents of the standard. Let's pause here and maybe just reflect a little bit on a few things that are important to get you up to speed again and into the swing of things. We start by looking at this. There's an objective. What is the point of IS2 inventories? And I think that's fairly obvious, to account for inventories. Something that is really important though. The name of this standard is inventories. The name of the standard isn't cost of sales. And oftentimes you find people that are new to financial reporting and new to accounting, they're very much caught up by the cost of sales. They're always trying to measure cost of sales. That's not what this standard's doing. This standard is looking at the statement of financial position. It's looking at that line item, inventories. It's looking at what is in my warehouse on a specific date. Remember, statement of financial position, you're taking a photo of a point in time. So in that photo, you're seeing inventories, you're seeing a warehouse. You need to measure those inventories. That's what this standard's about. Yes, obviously, cost of sales is affected by that. I mean, end of the year, your closing inventories gets transferred back to your statement of financial position if you're using the periodic inventory system. So they are related, but please, when you're reading this standard, you are here focusing on measuring inventories in your warehouse at a specific date. Then let's move along some more. You've got your scope. Not too much of an issue in your life now. You're still new to accounting. You're still exploring financial reporting. Later on will become more important to you. The economic events that we give to you at this stage in your lives are still fairly simple. They will become complex later on, and in practice you're going to need to sit with your scope paragraphs of IS2, of IS16, and try and work out, which standard am I in? Am I falling out of this standard, or am I falling into it? What is the case? What am I doing? So that's where that'll become important to you later on. Then the definitions. Super important again. You've got an economic event. It's an asset. You've worked that out. Now, is it an inventories asset? Is it an investment property asset? Is it property, plant, and equipment? Your definitions are going to help you there, guys. So you're going to need to have a look and know these definitions, which you probably do by now. You're not new to IS2 inventories. You've done it before. I mean, they do inventory accounting at school already, so it shouldn't be too much there. But just make sure, have a read through it, and we'll go through it just now, and make sure we get the nitty-gritty sorted out there, that you don't miss something. Then, this is quite important. Look at the measurement of inventories. It starts with paragraph 9, and then it moves down to net realizable value that starts in paragraph 28 and ends in paragraph 34. So if you look at the total number of paragraphs here, we've got about 40 paragraphs in this standard. As I said to you, nice and short, eh? But if you think, look at the measurements, that's more than half of the standard. So what did we say? The whole issue is taking a photo on a day, looking at your inventories in that warehouse. What are they worth? How do I measure them? That's what IS2 inventories is really worried about. Then they've got a section there, recognized as an expense. Well, that's now the cost of sales. So cost of sales is addressed. And look at that, it's paragraph 34 and 35. What did I say? It's not the focus of the standard. It's almost where we dump the things when they're not inventories anymore. Take them away from our statement of financial position and dump them as an expense in the income statement. Then a few disclosure rules. You can go through that later on. If there's something interesting, we'll discuss it later on in the videos. But for now, your focus and thinking is probably going to be on the measurement of my inventories. Right, now don't get a fright. You're suddenly seeing property, plant, and equipment in front of you. That's right. I just want to show you something and emphasize a point here. You don't have to go back to it. You know this well enough. The point I want to make here is just have a look on this table of contents, the definition. So we've just discussed the IS2 definitions. What happens next? Now it's a recognition. So you meet the definition. That means I've got the account that I want to debit or credit. Okay. Now it's the recognition. Can I actually do this journal entry? Can I recognize this event in my accounting system? So IS16 here has got quite a few paragraphs on that. You start at paragraph 7 and you go down to your subsequent costs that end in paragraph 14. Then we go into the measurement. So we've said, yes, okay, in this case, I'm with IS16, so it is property, plant, and equipment I want to debit. So it meets my definition of property, plant, and equipment. So there's my element. Now, can I actually do this journal entry? Can I recognize this journal entry? I'm going to have to go into these recognition criteria. Then, once I've decided, okay, cool, I know that it's property, plant, and equipment. I know I can do the journal entry. I can recognize it. What do I measure it at? And then IS16 moves into your measurement. So just put that on your mind now. That's what IS16 looks like. Keep that image in your head. We do the definitions, then IS16 does recognition, and then it does measurement. Now I'm going to take you back to IS2. Compare this content to what you've seen now in IS16. Definitions and straight into measurement. So, recognition of inventories as an asset. 1989 recognition criteria in that framework. Okay, I don't want to confuse you again, so you're seeing something on the screen now that you're not seeing in your standard next to you. That's right. What I want to do now is that we've just said there's no recognition in IS2 for the purchase of your inventories It skipped straight into measurement. So I've just opened the 1989 framework quickly. You don't need to run to it now, just to keep the story flowing. Paragraph 83 in the 1989 framework. Just read it from an inventory point of view with the lens of, I have just purchased inventories that I intend to resell. Can I recognize those? Can I do the journal entry? It is for inventories because it's for resale, so it meets the definition in terms of IS2 of what inventories are. But can I recognize the journal? Well, an item that meets the definition of an element, in our case, inventories, so an item that meets the definition of inventories should be recognized if it is probable that any future economic benefit associated with the item will flow to or from the entity. Well, I purchased these things to sell them, so I think we got a fair chance that we're going to make money from this. And remember to always check those words there, and or. In this case, it's an and, so both of these requirements must be met. The item has a cost or value that can be measured reliably. Okay, that's a separate question. We're going to move into measurement now. We'll be able to determine whether we can measure that thing reliably. But there's your recognition criteria. I've got an economic event. I've applied my definition of inventories. Yes, it's something I'm going to be selling. I'm buying this to sell it. So I'm in IS2, I'm inventories. Can I recognize the journal? Go back to your 1989 recognition criteria and the 1989 framework.